Welcome to Larkin-Gowan Insights, accountancy and business advice for all, a series that gives you bite-sized tips and guidance on tax, funding, legislation, reforms and much more. With case studies, business advisory and sector specials and even interviews, our team of experts are committed to helping you navigate the world of accounting and finance with a variety of presenters from across our specialisms. So, let's get on with today's show.
Hi, I'm Megan Howard.
Hi, I'm Alanah Thompson. This episode is part of our Life Cycle of a Business series, where we'll be looking at taking you from a startup business to exiting the business.
Today we are doing an episode on thinking of starting a business, and we are joined with our colleague Glenn Matthews. Glenn, do you want to introduce yourself a little bit?
Yes, hello everyone, and thanks Megan. So my name's Glenn and I work in our Norwich office. So if you're watching on YouTube, you'll see I've got a few grey hairs. So it's probably been 15 years or so that I've been helping small and medium businesses in the Norfolk area, and focused probably in the last 10 years or so on startup businesses.
When was your 15th anniversary, Glenn? Because my 10th was on Monday. So I had to buy cakes for the office, which I just think is outrageous. That when it's your anniversary, you have to buy the cakes. So when's your 15th? Has it been?
This is the thing. So I had a bit of a career break when my wife and I were lucky enough to go travelling. So actually, it's just 10 years since I was back this month as well. So it sounds like probably I rejoined the firm just when you were joining, and no one made me buy cakes, but I did get a gift voucher. So it sounds like I've got the best deal all round.
Yeah,
really.
Well, maybe you can buy cakes and I'll accidentally be in the Norwich office that day.
So, Glenn, let's start quizzing you. I've got some ambition. I'm ready to start up my own business. What should I be thinking about? What should I start to consider?
Really good question. So I think the key thing is to not jump into anything too quickly. So do your research. In a lot of cases, it's a business that you've maybe thought about for a little bit of time. It's something that's potentially going to be your baby. So you're going to probably have quite a lot of blind sides there. And in your mind, it's going to be the most perfect business and that you're going to earn a lot of money. But I think it's worth investing a bit of time at the start just to make sure that actually you've got your business idea correct. So all around the country, there'll be sort of agencies who you can go to who will be government funded, where you can go and do a couple of days course where you'll sort of have a business coach who will sit with you and just go through your idea, and almost you sort of present to them in a sort of Dragon's Den type pitch. And that person doesn't know you, they don't like you or love you yet, so they're not going to be afraid to tell you that there's some holes in your business idea. And we've seen far too many people who have just sort of, if they're a poker player, they've gone all in first round, they've invested lots of money in going back to Dragon's Den. It's that, oh, I've remortgaged my house and I've done this and I've done that and I've got sales of £2,000, where you kind of think, well, if you'd have taken a step back at the start and just thought about your business idea and run it past someone who's independent from you and but trained, then potentially you might have never entered into the business. And while I wouldn't discourage anyone from entering into business, the worst thing you can do is to plough a lot of your time, money and investment into a business that's never going to work. That would be my advice. Similarly, around the country, every library will have a business part of it, and as part of that you should be able to get some one-to-one sessions. So that's something that a Larkin-Gowan would engage with most of the libraries in Norfolk and run those sessions, just to, before you've invested too much money into something, just to run it past someone completely independent who won't be afraid to say, well, I think there's a gaping hole in your idea there. On a similar theme, I would say, have a look if there's any grants or anything. There's all sorts of grants that are available for new businesses, which is going to minimise the investment you have to make in your business. So I think I would look at all of those type of things first. And one thing we see quite often, which I think in a lot of cases is a really good idea, is people will run their business as a side hustle first. You've got this fantastic idea, you think it might be great. I probably wouldn't be handing in my notice into work straight away. I might maybe just see how it goes first. And then if things are successful, fantastic. Then you get that lovely moment to hand your notice in, but maybe don't sort of throw the baby out with the bathwater and do that straight away. And on that note as well, if you are doing that, tell your employee you are. So I'll never forget, probably about 10 years ago, someone came to see me and they had, I think it was a really good idea, they'd invested so much of their time in it, and then they told their work they were going to do it, and they said, no, you're not. It's in your contract saying that you can't work outside of what you do with us.
Yeah.
So yes, so I think these would be the sort of inception stage of your business, my top tips.
Yeah, so definitely getting the outside perspective is a good idea, and it helps to take the emotion out of things, because I think sometimes we see a lot of emotion in the first stages, and it's really important to just sit down and think about what you're going to do. But then you've spoke about not stepping away and taking that step forward too early. How do you know when the right time to take the step is?
Yeah, well, I think this depends business to business, really. So if you've got essentially a company doing what you were doing as an employee, but you're going out on your own, you know, you've got contracts in place that are going to feed you and your family, then fine. And you noticing that's great. And so there's something that we talk about, which is like a personal sort of survival budget. So I'd encourage anyone to say, well, how much money do I need on a monthly basis to pay my mortgage, to eat, to do the things that I enjoy doing? And how likely is it that the business that I think I'm going to set up is going to be able to provide me with that money?
That's definitely something I've been through with people quite a lot, is actually, can you afford to pay yourself as well to be able to live off what you're doing? Because something
Yeah.
can be amazing, you put so much money into it, but you do have to look after yourself, don't you? You wear many hats as when you first start off.
Well, exactly. And so that's not to discourage anyone from starting up their own business, because in a lot of cases it's a real success and it's the best thing that you've ever done. But if you just put that bit of thought in at the start to make sure that you're not sort of leaving yourself too exposed to anything and putting yourself in a position where you might have had a business with a few tweaks that could have been a massive success but ends up being a failure just because you've not put all the right groundwork in. And you wouldn't build a house and go, well, I don't really know what the groundworks are, but I'll just put the bricks above ground and hopefully everything will be okay. You want all that groundwork in place, don't
Yeah.
you?
Yeah,
Absolutely, and I
definitely.
think part of the groundwork is your network, isn't it, as a first step too. So do you want to talk a little bit more about the importance of the network and the impact that that has on a new business?
Oh, absolutely. So the external network you have, so again, probably depends on the industry you're in. If you were someone who think, well, actually, I'm quite handy, I can do craft type of things. Having people who are in similar type crafts and can make introductions would be something that's really useful. Sort of outside of that, things that every business I think probably wants to get in place is know who you want to bank with and make sure that they're going to work well for you. Again, depending on what your business is, probably you're going to want to have a solicitor in place. So you might want a solicitor to look at terms of engagement, those type of things. It's getting all of those blocks in place to make sure that you're not leaving yourself overexposed in any area. So, but some people might go, actually, my business is really simple. I don't need any of these things. Fantastic. You've had a thought about it. You don't need them. And you know that whatever network you've got, I think outside of that as well, having someone who is truly happy to tell you how they see things, and if they sort of have a bit of a business head on them, is really important as well. So I think one of the key things we do as accountants really is not necessarily putting people's numbers together. It's being at the end of the phone when they've got that. Well, I think it's a cheaper question, but I just want to run it past someone.
Really.
Or,
Yeah.
oh, I'm thinking about doing this thing. Do you think that's a good idea? And it doesn't, in the first instance, have to be an accountant straight away, but there's someone who you can bounce ideas off and go, well, I'm thinking about this. What do you think? Just so you've got that sanity check really to make sure that you're not doing something that's too daft.
And
Absolutely.
what if you don't know any solicitors that, or those types of people? Like, where can people go to find that kind of network with them?
I'm kind of mindful when you're starting a business and you want to have all these things, but you want to keep your costs in check. So I would say, again, through the business library, you can get free sessions with solicitors. So they should be able to, in that hour or so session, be able to say to you, well, I think these are the key risk areas for your business. If those are things that worry you significantly enough to justify that, then you could engage with them or someone else. At least then you know what the key issues you need to think about are. But also,
Yeah.
networking events are very good. You're going to meet a range of people. So you might want to go to a networking event or get involved in a community that's specific to the industry you're in.
Yeah, there's quite a few forums, isn't there, for specific industries out there?
Well, exactly. So in terms of insurance and stuff, there's specific like industry specific insurances you can get. So if you're a painter, say, why not join a forum of other local painters, and you can just again bounce ideas off them, ask who they get their insurance from, ask them when they were setting up their business, what kind of legal things did they come against. Almost a kind of, if there's someone in your area, it's worth taking them for a lunch or a coffee or something just to pick their brains. We always say like that the best mistakes to learn from are other people's mistakes. So if they've not quite got something right, I'm sure they'd be happy to share to someone in the same industry as them. But even general networking events are really good. You'll have probably a number of people who have started up small businesses in a similar ilk to you, but typically these things as well, you have a few professionals as well. Generally, they're not going to be on a hard sell, so you should be able to glean some information from them at that point.
Yeah, some of the networking events that the Norfolk Chamber run are really good, and it creates a bit of a community feel as well. There's quite a lot of people in similar boats, so they now have the solopreneur section, so people can go to those. Co-solo, I think it's called. Yeah, lots of guidance from other people and great speakers at some of their events as well.
Yeah, exactly. And there'll be similar chambers all over the country, won't there?
Yeah.
So if you're not listening from lovely Norfolk, then I'm sure there's something closer to you that would do a similar job.
So then getting into the nitty-gritty of things. So if someone is starting their business, how do they kind of determine what structure they want? What is the difference between being a sole trader versus being a company, that sort of thing?
Yeah, in a word, paperwork. So if you're as things stand as a sole trader, then at the moment you just have to put two numbers on a tax return, and one is my income, one is my expenses. So albeit, I mean that's probably a bit blasé. There's some work that goes on behind that. But in terms of what you actually have to tell the government, then that's all you have to do as a self-employed person. In 2026, that's going to change, and there'll be a little more you have to do. But if you were to set up a company, then you would be in a position where the company had to do one set, as things stand, one set of account in one format that go off to Companies House, which is the organisation that looks after companies. It has to do another set in another format that goes off to HMRC, and it has to do its own tax return, which again is in a prescribed format. All of which means that, generally speaking, you'll need an accountant if you're a limited company. Where certainly while you're in your infancy, you might decide that you don't necessarily need an accountant if you're self-employed. There might be, says the accountant, a lot of good reasons why you do want an accountant, even if you are really small. But it's not a cost you necessarily have to have. On the limited company side, it's very difficult. So I've only ever met one person who has a limited company who completed his own accounts, and he said it is because he found it interesting, which I guess it takes all sorts. But the problem is, because there's quite a lot of compliance to do, even if you wanted to do it yourself, you might end up spending a few days doing that. And that's a few days that you could probably be doing work and earning money. So you'd probably be better off paying an accountant to do it anyway.
As a startup, you're wearing all different hats as it is, and all of the compliance of a limited company only adds to that, doesn't it?
Well, exactly that. So what we often see is, if you are starting out fairly small and you're not sure to scale what you're going to do, then most people will start by being self-employed or in a partnership. So being in a partnership is very much like being self-employed, but with someone else. So it might be husband and wife team who are starting a business up together, in which case you'd register as a partnership. But most people who have businesses on a small scale, because of all of the extra compliance you have to do as a company, they'll start off as self-employed. And the good thing is, if things really take off, then you can always transfer into being a limited company later. The things that potentially put people off going down the self-employed route is if they're doing something that's inherently risky. So the really good thing about being a limited company is it's separate from you legally. So if you were doing something you thought, well, this is damn risky, and I'm really worried it might all go wrong. If you do it in a company, at least it's only the company that is then going to fold, and your personal assets won't be on the line. And we'll circle back. I think if you're doing a business that you think that's risky, then maybe not starting it at all might be the better option. Regardless of whether you're a limited company or self-employed, then you're going to want to make sure you've got appropriate insurance in place, which means that if the absolute worst does happen, in theory, unless you've been really, really negligent, then your insurance should cover you, so you're not going to be on the hook anyway. There's a few cases where you might need a limited company, so the other might be sort of reputational effect. So people go, well, people see I'm a limited company, they'll know that I'm taking things seriously, they'll know that I've gone to the effort of setting a company up, so I'm legit. And again, that kind of stuff tends to vary from industry to industry, which is why, like you said, having some contacts in the same industry is brilliant, because you can say to them, well, how do you operate? Have you ever had any problems being a self-employed person with people refusing to give you work because you weren't a limited company? And then you can kind of weigh up the potential benefits of being a limited company against the likely cost of having to pay an accountant to put together your annual accounts for you.
Yeah, so I think what you're saying is it depends on size as well, doesn't it? So if you're doing it as a side hustle to start with, you're thinking maybe self-employment. If you're going to go put everything on the line, actually it's a bit risky, maybe go company. Different depending on your circumstances, isn't it?
Well, absolutely. And I think it's worth, even if you don't right at the start want to pay for an accountant, just book an hour meeting with them. Any decent accountant, us included, will offer an hour's free consultation where they can sort of outline to you and consider your specific circumstances, because it's very much a case of there's no one size fits all in these things.
Yeah.
But as a general rule, self-employed tends to be better if you are smaller, but you might have some specific circumstances that would mean that a limited company might be better for you. So even if you think, well, I don't need an accountant right for now, but I might want one in a couple of years, just reach out to an accountant, have that 3 hours consultation, and you're going to be in a much better place to know what the right structure for you is likely to be.
Yeah, I suppose one other thing people need to consider as well is the VAT registration, whether they need to be registered straight away or whether they can wait a bit as well, see whether they do grow up to that threshold or not.
Yeah, absolutely. So being VAT registered is just another bit of compliance you have to do.
More paperwork.
Well, exactly. I'm guessing we'll talk about how you keep your books later. So being VAT registered might not necessarily mean too much on a quarterly basis extra work, because the software these days does a lot of it for you, but it is another thing to worry about. So as a general rule, I would say to people, unless you have to, so if you're starting a business and you're going to turn over a lot of money, the registration threshold is £90,000 in a rolling year. So unless you're going to turn that over in your first month, I don't know, you're selling very high value goods, you're selling sports cars or Rolexes or something, my advice would be just to hold off, wait and see, because you can always claim free registration VAT on most things anyhow, as long as you register in the first 6 months. So for most people, get your company set up, or your self-employed business, start doing your bookkeeping that I'm sure we'll talk about a bit later. And then once you come through all that stuff, then you could consider registering for VAT.
Right.
Again, you'd think in the hour you'd send an accountant, that's one of the things that they would cover off is, should you be VAT registered straight away? And there's a few cases where it can be really beneficial to, but in most cases it's not going to be, and it's just going to be something else for you to have to worry about. So my general advice would be, you don't have to straight away, but it'd be good to have the conversation and the thought about it at least before you started trading.
So we've talked about operational wise. There's not too many the similarities between the two, are there, on a day-to-day trade basis? But let's say we've got one sole trader and one limited company. What is the difference going to be in terms of their records? What are their records going to look like, and what differences will we see in what they have to actually keep for their year-end reporting?
Yeah, well, so for the moment, there's probably not much difference in terms of what you'd keep. So for now, as a self-employed person, if you wanted to, you could keep a spreadsheet of your incomings and outgoings. Again, you might choose to engage some accounting software because it would be a time saver. But where we are at the moment, if you're a non-VAT registered self-employed business, you've under no legal obligation to have cloud accounting software in place. For limited companies, probably you're going to want cloud accounting because you're going to have higher value transactions. You're probably going to have more transactions, so you're more likely to have the time saving. You're somewhat experts in cloud accounting. Generally, they are softwares which will link up with your bank, which means rather than going down your bank statements and line by line having to analyze what's in there, what the software is really clever and will do a lot of that for you. So at a minimum, people will find that they're a time saver for them. And again, when you're starting out and you're very small, you're just weighing up the monthly subscription costs to do things, which can be anywhere from sort of £5 to £20 against the time that you're saving. So you wouldn't have to save masses and masses of time to justify having those. And then once you've got over that, then where cloud accounting is exceptional is that you put very little effort in because the software is clever enough to do all of it for you. But it can kick out lots of really useful business information. So say you've set up a new business and you're selling 2 products. At a drop of a hat, you can see how both of those products have compared sales-wise and profit-wise in the last month, 6 months, year, whatever you want, pretty much just by clicking a button. Whereas if you had a spreadsheet, you'd probably have to extract a lot of data and spend a lot of time, and potentially you might not get the calculations right and you might get a wrong impression of how those things are performing. So having software that will do it for you is a real value add for your business. So if you're at a point where, like I say, you've kind of got different products and you've got a bit more going on, then these cloud accounting softwares are fantastic. But essentially, you just have to record everything that's come in and out of your business. And that's no different from a limited company than it is for a self-employed person. So I'm glad you mentioned that, actually. So that's one big tip if you are self-employed. Just have a separate bank account for all of your self-employment income and expenses, because there's nothing more problematic than having it go out of just your general current account than having to fish through all of the transactions that are you buying a takeaway or buying your weekly food shop, and then trying to work out what's gone out of there that actually relates to your business. And in reality, what will happen is you'll probably miss a load of business expenses. You won't claim them, and it'll mean you'll end up paying more tax than you might have otherwise done. And that's kind of the equivalent of writing a check to the tax man. And that's not something, as accountants, we like you to do. We like people to pay the right amount of tax because you're claiming all the expenses that you're allowed to.
Yeah, absolutely. So the digital software that you mention is something that we love at Larkingow, so we have plenty of people that can help set that up, can't we, and show them, train them on how to use that and make sure that they are recording things in the correct ways. Setup is so important so that going forward you can look at your product analysis and that sort of thing that you mentioned, Glenn.
Not like most things, it's worth investing that bit of time at the start to make sure that you're doing it right. If you are self-employed, then you'll quite often feel that the paperwork's the last thing you want to do when you get to a Friday afternoon, evening, whatever it may be. So anything that can save you time is fantastic, but it's really, really good to keep on top of it if you can, because it might be a pain doing a week's worth of it on a Friday afternoon. Believe me, it's a lot more of a pain doing a year's worth of it 9 months after the year end.
Trying to remember what you did, a year ago.
Well, exactly. It's hard for anyone to remember what they did a year ago, isn't it? So
Yeah.
I'd say one of the top tips is, if you can, just keep on top of it. So a lot of my clients, their bookkeeping, because it's cloud-based and the setup rules and things of that nature, is very much I click 5 or 6 buttons and then that's done, and I can go down the pub and enjoy my weekend. And what a lovely position to be in, as opposed to having to keep a manual spreadsheet. I've missed a line, or if it doesn't work, what's happened, and probably spending up 2 or 3 hours doing something that in reality, because the software is available, and you had to take 5 minutes or so. That's probably 2 or 3 points you've missed out in that time.
It's definitely a mixture what we see here, isn't it, between those clients that prefer to do their own bookkeeping and those that prefer to outsource it to us. And I think those that do the accounts themselves, they almost take pride in their figures and learning more about the software, don't they? But those that outsource, they're not necessarily missing out on anything, because they'll have access to the live data on the digital software, and they can extract the reports almost instantly once the input is there, can't they?
Yeah, absolutely. So, but I really, just to some extent, if you've put the numbers together yourself, you know where they come from. But your accountant should be working with you to make sure that the numbers are all going in the right place anyway. So you should get to the end result. Either you do it yourself and incur some time, or your accountant does it and you incur a small amount of cost. You should get to the same end point.
Yeah, it's the same that the lots of people say commonly, isn't it? You need to put in the good stuff to get out the good stuff.
Yeah, the classic old rubbish in, rubbish out stuff.
Exactly.
And having that real-time data as well, so it helps you with your cash flow, doesn't it? Knowing what you need to be saving potentially for a tax liability coming up.
Yeah, absolutely. So that's another thing which has been really helpful in the last couple of years is your online banks now have automatic functions where you can have a saving pot towards tax. So you can set up a rule, say it says of all the income I receive, I want 20% to go in that saving pot. And then it's kind of safe over there. And you don't have to. I think sometimes the temptation when you're self-employed is money comes in and you go, well, it's my money and I'll spend it, which is absolutely fine. And the pain of paying the tax goes down the line some way, sort of kick that can down the road. And eventually you'll have to pay that tax, and at which point you'd have to find that money. You can put some money aside as you go along. Say you're putting 20% of your income into a separate account. Your tax is likely to be less than that. So when it comes round to paying the tax, it's a much nicer feeling because you can then transfer some of that money off to yourself and it feels like a payday as
Less of a
opposed to,
bonus.
well, exactly. Well, psychologically, if it was my business, I'd rather some money disappeared off when it came in, and it was almost sort of automatic that it happened, and then you get a payday bonus when you come to pay the tax, rather than viewing it, well, it's all my money, I'll do what I like of it, and then letting sort of future Glenn worry about where the tax is going to come from.
It is all a change, isn't it? So having to do your first self-assessment return once you've started a sole trader business, and it is a bit of a shock, isn't it? Having set days that you pay your tax rather than the tax being taken before you actually see the money. So I think that is a struggle.
Yeah, I'd agree. So what I'd encourage people to do is to, well, like I say, set some money as you go aside, and then you're always going to be okay anyway, and to get your tax return filed as early as possible. So although the filing deadline is the 31st of January, and some of our clients see that as a challenge, actually, that's
Right.
the latest you can do it. You can do it straight from the 6th of April. And I would, if it was me, I'd be looking to do it in sort of early May time. So I knew what tax I had to pay. And I'd probably pay it then as well. So if you pay early, HMRC will pay you interest on it. In a lot of cases, your business current account's not going to be earning any interest. So I would rather pay them, know it's all done, and then you don't have to pay in any point in the future of paying the tax, knowing that it's sat there earning interest until you would have had to pay it anyway. Again, if it was my business, that's what I would try and do, rather than thinking, well, I've got till January to do my tax return, I'll worry about that on the 15th of January, realizing that your tax bill is maybe more than you thought it was because things have gone better than you remembered all that time ago, and then having 15 days to suddenly find a tax. Obviously, if you find yourself in that position, it's probably not the end of the world. And even if you couldn't pay the tax, then the HMRC are kind of understanding. But I'd much rather be in a position where I was ahead of the curve and had paid my tax well in advance and could know that it was earning interest all the time, that my money was sort of working for the whole year then.
I think if you got your tax in by the beginning of May, you'd be your accountant's favourite person as well, wouldn't you? To beat that rush before summer holidays and stuff, to get it all done and dusted. It'd be
Yeah, well, exactly. And depend. So if you have a tax bill of over £1,000, you have to pay something called payments on account twice a year. In which case, if you do your tax return early, you can reduce the July payment if that's applicable. So say you had a fantastic year last year, but this year's not been quite so good. By getting your tax return early, then you're probably saving yourself having to pay that money across in July anyway.
Mhm.
So there's just loads of advantages of doing your tax return early. And I know people hate doing paperwork and they'd rather put it off. I genuinely think there's loads of good reasons why you should get it done early if you can.
One of the big differences between being a sole trader or maybe a company instead is how you're actually going to pay yourself. It's quite a big question, isn't it? Or at the moment of what is the best way coming out of a company, how to pay yourself. But what's kind of the key differences between sole trader and a company?
Other than saving your tax that we've already discussed, as a self-employed person, essentially there is no legal division. So once you've earned the money, it's yours to do what you like with it. There's no need to complete any further paperwork. You don't have to declare a salary for yourself. You don't have to pay dividends or anything of that ilk. If you have a limited company structure, the one thing you need to remember is that money belongs to the company So we talked earlier about having that separate legal division and how that's fantastic because it's separate from you. The flip side of that is that the company is earning money. It's not you that's earned the money until you pay yourself from the company. So historically, what we would do in a lot of cases, people would take a fairly small salary and then take the rest as dividends, and that was a really tax efficient way of paying yourself. Successive governments haven't been massive fans of that and have tried to find ways of challenging people on it, and when that failed, they've just changed the tax rates. So again, for most people, you're in a position, if you're in a limited company, you're going to be in a similar tax position whether you pay yourself a salary or a dividend. But the important thing is that that money is not yours until you pay a salary or dividend. I think probably the biggest pitfall I see with people having limited companies is that they just treat their bank account as if it was their own bank account and pay lots of personal things out of it, which can leave you in a few thorny positions from a tax point of view. So I'd strongly encourage people to have a company to only put expenses through that are business expenses. And then if you want to take any money out, that's absolutely fine. But you want to be touching base with your accountant at that point to say, oh, I want to take out X amount. What's going to be the most tax efficient way of doing that? And in all likelihood, there's not going to be a massive tax advantage from it either being a salary or a dividend as things stand. And that's a massive caveat for that is we've just had a new government coming in, and as accountants are all feverishly waiting for the first autumn statement in October time, where that might be blown out of the water and there might from that point be like a clear winner. But with the tax landscape where it sits, there's not a lot of difference. So I feel like probably if it was me again, I would rather have a salary and have the tax taken off if there is any to pay at that point. The thing is, if you take a dividend, then you will have to pay tax on it, and it will go on your self-assessment tax return, much like your self-employed income would. So it's just more money to save for the future. So the tax is roughly equivalent. I think I'd rather have a salary and have it taken off me and not have to worry about scribbling any away. But like I said, I think that's very much a conversation you need to have with your accountant. And the real thing to be aware of is not to treat the company money like it's yours until you have either taken a salary or a dividend, and then you shouldn't get yourself into too much trouble.
I suppose with this salary as well for companies, you need to consider PAYE scheme, setting that up and having that run as well, don't you? It's more paperwork, I suppose.
Yeah, you're absolutely right. Think about setting up the business first, and then maybe a little down the line, you want to think about how you pay yourself. Most businesses are probably, for the first little while, going to be more of a cash drain than they are a cash cow, depending on your business. So I'd get my business set up in the right structure, and then once I was income making, I would start to think about how do I pay myself? I've now got a pot of money that I want to take out of the company. At that point, you may set up a PAYE scheme to deal with that. And again, you just want to run that past your accountant because there's all sorts of complications once you are an employer. If you're just employing yourself, it's not so bad, but if you're employing other people, then it gets really complicated really quickly. Using your expertise, your accountant, just to make sure that you've got all your ducks in a row. And you might choose for them to set up the employer account for you, that they can do that, but just running it by them to say, is this a sensible thing to do? I think it's really important to do that.
And just what you touched on there about accounts as well, is that we actually can talk to HMRC if we get the authorization in place about PAYE and tax and things like that, so that we can help and take it off of the business owner's hands, essentially.
Guilty in our industry of using a lot of jargon terms, and HMRC are exactly the same. I think sometimes if you ring them, they might be talking a language. I think we always do our best to try and make sure that we're sort of talking the same language as our clients. But I think HMRC don't always have that same courtesy. So you might be in a position where you could ring them yourself, but what they're telling you might appear to be absolute gobbledygook. So in a lot of cases, it's useful for us to have those conversations with you so we can explain to them what's happened if something's not gone quite right. Or they can explain to us what's happened at the end, similarly if something's not gone right, and then we can make sure a solution's put in place to sort of bring things back into equilibrium. So yeah, it's something we do pretty often for clients, isn't it? We'll ring HMRC on their behalf. So we're the ones who are sat on for an hour on a hold with that horrible hold music rather than the client have to do it. If anyone ringing this on this podcast has a business and has rung HMRC, they'll know exactly what I mean by that. I mentioned the music's changed in the last 20 years, and it's not exactly classical music, I wouldn't say.
No, but it's also the advantage of us having the records all in one place. And I think as a business owner as well, that's another tip, is to have a separate folder, or if you are using digital software, to make sure it's updated, so that if you do find yourself in a situation where you're on the phone to a body such as HMRC, you can easily locate what you're looking for.
People used to just keep folders and folders of physical invoices. And if you absolutely love having a bookshelf full of folders, you can do that if you like. But I would say, if you're going to do that, organise it into months. So like you say, if they go, well, we're querying this thing and it's in April, then you can very quickly pick it out. But these days, people tend to keep their receipts digitally. So I would just have on my desktop somewhere, several folders set up, and one for each month. And then if you do HMRC want to see an invoice, which to be fair is fairly rare, but they might do, you've then got it easy at hand. So at least you're not then spending hours on end rummaging through all your folders trying to find a receipt that you've got somewhere, but you can't exactly remember which folder you kept it in. So yeah, so I'd encourage people to do that. And certainly if you're using the accounting softwares and you have the function to save the receipts into there, I just do that, because then you can just search for the amount in the softwares and the receipts there for you as well. So you don't even have to rummage per month. Then you just type the number in and find it, sort of a drop of a hat.
Definitely. And there's all sorts of apps, aren't there, nowadays, that you can just take a picture and upload it straight away. We're long past the shoebox days.
Yeah, agreed. But some people love doing that, and if that's your bag, then who am I to disagree? But we're finding more and more people now would rather have things in a digital form because it's easy to find. And if someone was coming to see me to start a business, then my advice would always be to keep things digitally, unless you've got a really good reason that you like to keep them in paper form.
Starting a business is a super exciting time. There's quite a lot of things that you do need to consider. So I guess people's call to action are to get in touch with their network of people, maybe find a local accountant that they can reach out to and help them. Obviously, we're here at Larkin Gowan to try and help people through that process of starting their business, finding their right structure, handling HMRC, and finding the best way to keep their records and pay themselves. So thank you very much, Glenn. If anybody has any questions, you can find our contact details within the show notes.
Thank you for joining us for Larkin Gowan Insights, Accountancy and Business Advice for All. Don't forget, you can find more information about today's topic and more about how our team of experts can help you in your business by visiting our website, larkin-gowan.co.uk. Join us again next time for another fascinating insight into the world of accounting and finance.